All right, so we've got 20,103.75 mid gap. I'm not ruling out the possibility of August 22nd's high being revisited either today or tomorrow. We have news coming out at 10 o'clock, so I would like to see it sweep that 20,085 level for sell side, and then we'll see at 10 o'clock if they can start to send this thing towards the high of the August 22nd. Doesn't need to go down there. I mean, it's done enough to fulfill half the gap, but I'd rather see that. That would indicate that we have majority of the gap closed. You could leave the lower portion below the lower quadrant of the opening range gap. Difference between yesterday's selling price at 4:14 p.m. Eastern Time to 9:30's opening bell today. And again, you determine that and see it by going to regular trading hour. That's this. That candle's closed to this candle's open, and I'm measuring the levels with the fib, get the quadrant. All right, so they've done the run on 20,085 like I was looking for. So everything's primed now for a 10 o'clock news release. They could use that as a smoke screen to start sending it to the August 22nd high. I'm going to go into the 10 o'clock news release after the initial hit of that, give it a few minutes, and then see what we have afterwards. And I'll look for signs that my pre-expectation of what the 10 o'clock news might bring us. So far, we've already seen it deliver nicely off of the first fair value gap between 9:30 and 10 o'clock. We've seen it trade to half of the opening range gap, so the 70% strike rate still holds true there. The run on 20,085 sell side, that has been delivered. So everything here has been made jagged. Look at the lows. Now the two fair value gaps here in gray, I'd be looking for them to provide inversion discount. That means if they trade above it, they should come down and support price and see if it can run to the initial high of the day where the minor buy side liquidity is annotated for a moment. This gray shaded area, that's Thursday's first presented fair value gap. I'm going to finally remove that. Sell side resting right below here. I'd like to see it return back to the opening range gap low. That's here. See how energetic it is after going down to that 15-minute discount wick constant encroachment level. Since the news release, there's been a few setups that I've outlined. I'm not interested in them. I'm looking for a very specific setup. While there's a plethora of obvious little tiny fluctuations, I want to see that little green. I want to see this green area here stay open. And right now it's presently using this fair value gap. I want to see this stay open and start to mount a rally up in here. Then my focus will be back inside these areas here where I've had the initial fair value gaps drawn. I want to see those be treated as inversion and make an attempt to get back up into the low of the opening range gap. I'm perfectly content sitting here waiting for what I want to see. It doesn't come, I won't execute. Got volatility today, that's good. Spending too much time inside that gap right here. Too much time. The importance of it. Inefficiencies have to stay with one or two candles and leave it. Starts booking price and building in multiple candles inside the inefficiency. It isn't going to perform like you think it will. You want to screenshot that? Notice we had a low here, and a third low. So it's a 3 drives pattern. It traded down into a previous session. It's Monday's London session, 330 low. Returning back for a minor buy side liquidity pool and retapping the new week opening gap low. You want to screenshot that. It's normal to work the half of the new week opening gap, the lower half. Normal for it to go just below midpoint or at midpoint and then come down, find a discount array, maybe touch an even mohawk below the new week opening gap low, and then reach for the upper half. And then there's minor buy side resting here, as noted earlier. Remember, you're looking at a 15-second chart. A mohawk on this is going to have a block candlestick body. We don't want to see it spend any more time down in here. Now that it's breached the midpoint, it needs to start working in the upper half. Ideally, you want to see this stay unfilled and it leave the new week opening gap high. You want to screenshot that. New week opening gap high is discount to the run to the minor buy side that's located 20.47 3/4. You want to screenshot that. Now ideally, it shouldn't come back into this little area here. If it does, then your interest should go to the sidelines and wait for the afternoon. Otherwise, I would want to see it trade back up to the 9:30 opening price, which is the opening range gap low. You want to screenshot that and be content for today. I'm going to leave the chart like this for a second so that way you can get a screenshot of it. All of the fair value gap that I was annotating initially while we were dropping down, they were never shaded in red. They were in a hue similar to this, meaning that I'm expecting it to be revisited and treated it as a inversion. And then once we traded above it, then I had the levels obviously in an orange hue that I would like. Down here, you can see how we had this fair value gap after hitting the sell side. We rallied, created a small buy side imbalance, sell side inefficiency, traded down into it, rallied, and then inside of every one of the fair value gaps I annotated, look how it was accumulating. That means it's staying inside of them long enough just to absorb anyone that would be trying to sell against it. So high frequency trading algorithms would accumulate that for long entries. Again here, the breaker, which is the low, highest candle, lower low than the previous after sell side has been taken. We accumulate at the low end of that breaker. You see that? Accumulation in here and then rally up. The bodies are respecting the breaker. we stab down inside of it. That's normal. This is all a bunch of mohawk on a higher time frame chart because this is a 15-second chart. So study your 1 minute, 2 minute, 3 minute charts in here. You'll see that they're just wicking below the new week opening gap low. Then we rallied up, spent a little bit of time here on 2 candles inside of the gap here, rallies up, accumulates more longs in here. This was a 1 minute fair value gap, so just watch the stream again. Then it rallies up. It's also the consequent encroachment of the new week opening gap midpoint. And I told you it should spend time up here. It's normal, but not come back down. Optimal if it stays open here. This is a measuring gap, meaning that half of the move, we take it like this. So what I'm doing is I'm measuring a low, the actual level, not the wick. That's the level I was looking for the sell side to be traded to. And I'm pulling the fib up to 50% of the low of that gap. That gives me the fair level to reach for, because a full run on that would be to this level up here. So it's the low, the level itself, not the low of candlesticks. The low of the gap, that's approximate midpoint. So this is a measuring gap. This run up should draw to this level up here, which is also the opening range gap lower quadrant level. So it's kind of neat how it overlaps, but it's not required because our target was the opening price at 930, which is the low of the opening range gap. So this would be low hanging fruit objective. Perfection would be these two levels agreeing, which is the lower quadrant of the opening range gap and the measuring gap here. I want you to take a look at these levels here I have annotated here. There are 2 times for my new day opening gap. The one here, this is what you've been watching me use for several months. There is no advantages over either one of them. They both work. Sometimes you're going to get a day where the 6 p.m. opening Eastern time, when there's that hour break, sometimes the close at 5 o'clock is the same opening price. So the way we work with that is we simply just annotate that level because it's going to be key. But we revert back to the new day opening gap, regular trading hours closed to electronic trading hours open. So it's 4:14 p.m. Eastern time to 6 p.m. Eastern time. Okay, so let me show you what that looks like. These levels were based on Thursday. The reason why I kept it on the chart, because I want you to think about how price was using them on Friday and on Monday and today. So when you're toggling, when you're annotating your new day opening gaps, use a 1 minute chart. This purple shaded area is the September 19th, 2024 new day opening gap. This is electronic trading hours closed to electronic trading hours open. So that candlestick right there is 4:14 p.m. So you have to use the final print on 4:14's candlestick on a 1 minute chart. Then up here, electronic trading hours open. That's the first opening price at the 6 o'clock candle. This is the other form of my new day opening gap. The one you're used to seeing is this one, where it's electronic trading hours close here at the 4:59 candlestick close to the open at 6 o'clock. That's the difference. See, there's a big disparity between both of them, but they're both being utilized. Look how often price is reacting off of it. See it here, here. We're going to focus on the lines, but what I want you to notice is how these two levels here are used by price. Sweep it just to go into an imbalance and a SIBI. Sells off. Beautiful delivery there. Relative equal highs. Sweep it. Turtle soup. Sell side. Trades up into it. Sells off. Builds buy side at that level right above these relative equal highs. Hammers it perfectly. Finds some support here. Rallies up. Top of the SIBI. Agrees with it here before it sells off. Beautiful work off of the high of it. The body. Look at the body, how it ran up here, but the body stayed underneath it. That means we're likely to go lower. Okay, and then we have new week opening gap. So here's the opening price on Sunday and the closing price here on 4:59's candle. Again, always on a 1 minute chart. That's where you get your levels from. Beautiful delivery. Look at that. Consequent encroachment of the wick. Falls right on that level. That volume imbalance here, close proximity to that as well. So it comes back up, redelivers into that, then sells off. Look at the top of it here, consequent encroachment of it here. And then we had Seek and Destroy yesterday, where we were working through the low of it. And this is Thursday's information. When we have things like the close at 4:59 and then the reopen at 6 p.m. Eastern time, if there is no gap there, then you revert back to using the second new day opening gap that I've just shown you here, which is 4:14 settlement price to 6 p.m. opening. And then back to consequent encroachment of the opening range gap.